Hey everyone, welcome to this video, and today we're going to learn about order blocks, also what we call S&D block, which stands for supply and demand block. Now we often follow and learn theories, but the problem here is that we will all inevitably face being inflexible. Theories are dead, but markets are live. In fact, markets are very live because millions of traders are trading it every single day, every single hour, and every single second. But these theories that we learned, they're quite set, and without a clear understanding of how they work and why they work, we will be clueless when the market appears a little different. We both know this thing. We look at the chart and the chart appears a little different from what we learned from the theory, and then we're confused. Oh my god, what should I do? Do I enter like this? Do I still enter? You're confused. You don't understand because clearly you do not understand the concept itself. So in this case, we're going to talk about order blocks. We first have to understand what order blocks are. Now, order blocks are an area of potent accumulation of institutional limit orders. Let us not forget that institutions themselves are also traders and they also place limit orders. So, what we call order blocks, so we can effectively trade with the institutions. So, right here we have two scenarios of one bearish and one bullish. Now, whenever we have a retracement, now I assume most everyone here is learning a little about basic structures. As you can see, most markets move in waves like this. I'm sure you can pop up any chart and you will find this very familiar. So, if that's so familiar, what are these retracements? What are retracements in short? Retracements are what we call order blocks. But there is a little catch here. In the previous video, we learned about what we call order flow. Order flow is an area of entire multiple consolidation areas. We learned about order flow, which is an area of consolidation that is a bigger area of order blocks. However, in this video, we're only going to focus clearly on order blocks. So what is the one rule for order blocks? Order blocks are retracement of an opposing trend candle, and it consists only one candle. So no two candles, no three candles, no four candles, only one candle. So if you want to find an order block, it's only going to be one single candle. This order block. The general rule for order blocks are when we see order blocks being reapproached in the future, we want to be looking for more downside. So similarly, if we are in an uptrend, we want to see some sort of retracement back to the order block and then a continuation higher. Now you might ask, this box is fairly huge. Which level will it react to? Maybe lower, maybe higher. There's no guarantee to this because we do not know exactly where the limit order is placed at precision. However, we do know that this entire area is a point of interest where limit orders are most likely placed in these areas. But there are many exceptions to order blocks, but in this video we're going to focus on how to find them and effectively use the real order blocks. So the rule here is that order blocks is the last red candle before a move up, which is an uptrend. And for a downtrend, it is the last green candle before a move down. And an exception to this is an area of consolidation, which can also be technically considered an area of order blocks. But a more professional word to use for that is order flow. So let's get right into the charts and enough of the theory, okay? So everyone, let's look at this chart right here. Now I want to look at two things. I want you to look at two things. Number one is this, number one is this. What do you see here? Do not ignore this zone here. We want to look at these two areas. What do you see here? What is an order block? As I said earlier, we clearly have a move down, a consolidation, and then a continuation down. So this area becomes an opposing candle, which is what we call green candles. But in my case, it's actually blue, depending on what color you're using for your charts. But it's an up candle. So once we have that up candle confirmation, the entire zone, or what we call an order flow, becomes the entire point of interest. Now, once we have the point of interest, we can actually refine the entry, and that is the order block. So once we try to refine the entry, we have an order block right here. But we can see that the market did not respect the order block too much, as it clearly exceeds the order block just a little bit. But it does not matter because we're looking for the entire zone. So any trader, beginner traders for order blocks, we usually do a very solid entry like this. And we're going to target an area of potential entry. So in this video's purposes, we're not going to actually look for the best entry because we're not going to actually look for the best take profit because, well, we're trying to learn order blocks, not how to learn to take profits. But generally, we would look for areas of interest. So technically, I would put it here, and this is a 1 to 4, and a very good trade. Now, you might say, what if we get stopped out? What if we get stopped out here? Sure, then we just re-enter higher, let's say here, and we look for a short at the higher areas, which is order blocks. We have to understand that in every chart, there's going to be many order blocks. You will have order blocks right here, you will have order blocks right here, and you will have order blocks right here. Generally, when we have three order blocks, let's say order block number 1, order block number 2, order block number 3, the most reliable one is obviously the highest order block. However, sometimes the price does not reach that high. Usually, we try to avoid trading the first order block because this order block is usually weak. So the rule here is to simply trade the second order block. So you should be placing entries here. So clearly here, let's just remove everything. There are certain times where the price does respect the order block number 3, which is the lowest one. However, we usually do not trust it as much as the order block number 2 and 1, because once the price breaks above the order block number 3, we have what we call liquidity right above this order block. Now, once we grab the liquidity and takes this order block, this is the order block that works. Now, earlier, we talked about one candle. So if we were to be very precise, this would be the green candle that we're looking for. So the price technically did retrace from here, and we did actually get an entry before the price even reached here. Before the price reached here, we actually had an entry ready here. So the price actually, this was a very good trade because we could have taken an entry like this, and then we could have just taken profit, let's say here. Okay, and you might say, well, why not here anymore? Well, you're gonna get stopped out. We have to understand that when we're playing with the risk-reward ratio game, we have to not be greedy. I usually stop at the 1 to 3, 1 to 4, 1 to 5. I never go above than that unless it's a very confident trade. So if you're looking for 1 to 20, 1 to 30, then you risk being stopped out many times before you get the trade. Okay, alternatively, you can actually enter like this. So even though the price does retrace higher, you did not get stopped out, and the price eventually did go down and hit your take profit. Although this one is slightly more riskier, and most people would have been very scared when the price reached so close to the take profit. Okay, so this is something that we have to pay attention to. So another example of an order block that I immediately saw on this chart, I did not prepare this chart. This chart is randomly picked out of random time frame. I usually pick the 4-hour. The general rule here is that the higher the time frame, the more reliable the order blocks are. So we go to the 4-hour, and if you do zoom in, so let's just zoom in here, you can see that this is the last green candle, or what we call the up candle, before a move continuation up. So this one becomes the order block. Although this is not a very powerful order block, but this is reliable enough to give an indicator that we did want to go up. And so an entry like this would have been quite feasible. You could target 1 to 5, or you can target points of liquidity up here. For example, here and here, these are points of liquidity, and you can literally target them just by using this entry. Now you might say, oh, this stop loss is very tight and I'm not quite familiar with it. Sure, you're gonna get stopped out, but look at the risk reward ratio. Look at the risk reward ratio. What does it mean when I have a 1 to 6 risk reward ratio? That means that I can get stopped out 6 times, and it is contra to one single winning trade. So you might get stopped out 3-4 times, but who cares? Because if you have a good risk reward ratio, it means that 1 to 6 basically means that you can lose 6 times, and all you need to do is just make one win to make up for all the 6 losses. So it's quite decent for a trade like this. But of course, you do not want to do something like a 1 to 20 because it's very risky. And order blocks are everywhere on this chart, so let's just go to a random place, and we'll just simply pick an example of an order block being at play. So this would be considered an order block. So let's say right here we did have an order block. Okay, order block number 1, the price retraced to the order block and immediately went up from there. Once again, the price retraced back to the single entire white candle here. Notice how I am taking the white candle and not the blue candle. So the price was so close to the stop loss. I mean, most people would have had the stop loss right here, but that was so risky. So this is precise. I would say quite precise. So if you have 0 spread, you would have no problem with this. But if you did have spread, you might have gotten stopped out here. So be a little careful with your entries and stop loss. Usually a little trick I would do is, instead of putting them very tight, I would usually do something like this and give it just a little space for movement. Okay? And my target would be something like this, just be above this high. Okay, and 1 to 2.8, very good. It's not a bad trade. Don't be greedy. Don't hope for 1 to 20 because that's not simply realistic. Now, in the same case, you might ask me, why did order block not work? Now, this is what beginners make. As with every theories, there's going to be beginners that just learned about it, but they confidently think they know all. I'm sure some of you watching this, no offense because I did this all the time, is that you're watching this video and you're like, hey, I'm pretty sure what an order block is, so I'm going to start trading. And I'm gonna throw in $50 or anything like that, and you're gonna start entering trades. And then within a few hours, you're going to lose a lot of the money, unless you're very lucky. But this is what trading is. It's just a game of mental. You have to be very disciplined. You watching this video and you think you know it because it's so easy to you to find the order blocks. I explain it in a way that you can understand, and you think, oh, if this is what you're doing, so can I. But the thing is, order blocks are much more complicated than that. Because trading is simple, but theories are simple, but it is not easy. Simple and easy are two different things. Order blocks are simple to understand, but it is not easy to trade it. So let's examine why this order block didn't work. So if we compare it to the previous order block, like let's say here, let's say this one, we're not going to draw it very precisely, but we just get a general idea on where the order block is, and comparing it to this, which is a mitigated order block, which is what we call a used order block. Okay, so comparing to this and this, why did this order block not work? Okay, well, this is what beginners make. They do not have context. They draw out every single order block they find, and this is when this shows that they lack direction and purpose. When you are trading a certain market, let's say that you are a swing trader and you're trading exactly this market. If let's say the time frame stuck was here and you were trading this market and you didn't know what will happen here, this is just blank to you. If you were exactly at this day and time, let's say you were at the August of 23 and you're trading this exact candle, you did not know what will happen back then, but let's look at context. If you are trading this entire area, you would only need to draw out the order blocks here, and it's too messy, but if I was trading this area, I would only draw out order blocks right here. I would not go and draw out order blocks right here, order blocks right here, order blocks right here, because why would I do that? I do not need to draw out the order blocks there because I'm only trading here. If you try to draw out every single order block you find on your chart, you are going to find hundreds if not thousands of them. If you go to the 4 hour, you would have many order blocks. If you go to the daily, you might have even more order blocks. And you go to the 15-minute and there's even more and more and more, and you're going to keep drawing them. At the end of the day, your chart is going to look very messy. And at that point, you don't even know what is reliable and what's not. Notice when pro traders trade order blocks, they only use 1 or 2 boxes of order blocks. So that being said, the mistake beginners make is that they draw out every single order block they find, which is not necessary. And they don't know what is a fake order block. Fake order blocks are a byproduct of poor context. So they're blindly entering trades because they just see order blocks, but they don't know the context. So the main biggest factor of beginners failing this order block theory thing is they're trading out of context. If you boil it down to every single thing, it's lack of context. They don't understand what is going on. So if we were looking at the entire zone, let us not forget that yes, we have order blocks here, but do we also have order blocks right here? Do we also have order blocks right here? Do we also have order blocks right here? Sure, we have order blocks here, but let's not forget that we also have order blocks right here. So the left of the chart is quite important. So if we do go this entire zone, let's just circle it out and go to the daily. So if we were to go to the daily and we were to specifically draw out the entire order block zone, we would have this entire area of order flow. So what happened here? The price barely touched this order flow area, or if we want to refine it, it would become something like this, the blue candle here. This becomes the order block, but the price did not touch the order block, it touched the order flow. So alternatively, you can use an entire consolidation zone as an alternative replacement to order blocks, but they're quite similar. However, order blocks are a bit more precise and safe. If you do want to play it more risky, you can actually use the order flow. So the price actually touched the order block from the left side of the chart. So sure, we have order blocks here, we have order blocks here, but this is not true. This is fake order blocks. This is fake. Yes, order blocks can be fake. You have order block. This is a fake order block. Can you see this doji right here? It's a fake order block. We have order blocks here. We have order blocks here, but all of them are fake because we have a real one here. There's only one order block real at a time. We can't have too many because institutional orders, they don't have too many limits placed around. They accumulate a potent level at a certain price zone. So if you have too many order blocks, it clearly shows that one of them or many of them are fake. So focus on one or two order blocks. When we have order blocks right here, we want to look for shorts instead of long. At the same time, we can actually look for order blocks right here. When the price retraces, this is also an order block. So once the price touched this single order block at here, we actually had another order block. So the price is moving from order block to order block. The price retraced from here and then came up here and touched into what? What is this? Can you guess what it is? And another order block. And so the price retraced to this order block right here. And the price retraced to the order block right here, and then go to the other order block, and then go to the other order block, then continue to respect and irrespect these order blocks. So order blocks are everywhere, and the market is just basically moving from order block to order block. Now, if you were to circle this zone, and we were to go to the 4 hour, now I know some of you are quite confused on why I drew that zone, because you might not see the order block that I saw, but if you actually be very precise in this entire zone, technically, this entire zone is a premium zone. Now, premium is something that I talked about in this channel. If you have not checked it out, you can actually check the first video in this channel, which we talked about premium. But if you want to go very precise and order block wise, this is entire zone of order block. If you were to precise it to one single candle, it would be right here. But the price clearly did not reach this area. Instead, it respected the order flow. So the price retraced and touched this order flow and then came down and then respected this order block and then went higher and then respected this order block and then went higher and then respected the other order block. So order block is just a very simple game. Trading is moving from order block to order block. Now there's fair value gaps, there are other theories, but order block is the very fundamental of trading. Okay, so this is it for this video. Thank you for watching. I hope to see you in the next video. A little homework that I would give you is that after you finish watching this video, please do not go and live trade anything. In fact, I would suggest you to demo trade or even open a trading account that is paper, of course, and then you can start drawing out order blocks. So let's say that I were to trade on the 4 hour, I would draw a small zone that I would want to trade, and then I would look at the left side of the chart. Are there any order blocks here, and are there any order blocks here? Now once I have established that, then I would go on to see which order blocks are fake and which order blocks are real. So once I have identified them, I can start taking trades. We can start looking for stop losses, take profit, and risk reward ratio. So thank you for watching. Hope to see you in the next video. If you do find this video useful, you can consider liking it and subscribing it. So thank you for watching. Until then, see you in the next video.